Less than 30 minutes ago, I bought the dip on crypto. And what did I buy? Why did I buy it? Do I think the bottom is here? Is today the bottom? Well, let's get into that. But first, let's cover what's happened over the past couple days. We've seen Bitcoin come down to a price level of about 20,000. We've seen Ethereum trade just barely above 1,000. We've seen centralized platforms such as Celsius suspend withdrawals. We've also seen countless crypto exchanges announce that they're doing layoffs. So in general, the environment looks very bearish. And part of it makes sense also. If you've had the chance to just put up any equity chart of the US stock market, nearly any equity market around the world, everything looks horrible. But naturally, as we should know, similar to the fact that nothing ever goes up in a straight arrow, nothing ever goes down in a straight arrow too. So by me saying that, I should kind of tell you that I'm simply making a play on the fact that we are going to see a bear rally over the next couple days. Now, I could be wrong about this. I could end up with pie on my face, and by the time I even get a chance to edit this video and put it out for you guys, I might be massively down on my position. That could be the case. But I think risk and reward, it does make sense to take a small nibble. Let's dive just a bit more. But for starters, I'll tell you what catalyst I was looking at for today. Just a couple hours ago, we saw Jerome Powell come out. He's the Fed chair of the Federal Reserve, and he came out and he announced that there's going to be a 75-point basis hike in the Fed fund rate. And why does that matter to all of us? Well, for those of you that are kind of unaware about what the Fed rate really does or how the Fed uses that rate itself by making it more expensive or cheaper to borrow money, it's a tool that they can also use that helps them either promote or stimulate the economy or slow down the economy as they like. During the times when we had COVID going around, well, the very first few months of COVID, there was a big fear that we'll be dropping into a recession and so forth. Well, we saw the Fed rate go all the way down to nearly zero. There was a way to try to stimulate the economy. At the same time, this rate is also used to try to curtail any sort of rapid inflation, which is what we're seeing right now, right? That's what the biggest fear is coming from, the fact that we have inflation. For the most part, it's coming from too much demand and not enough supply. Particularly right now with the whole situation that we have with oil and obviously the war between Russia and Ukraine and so forth. But anyhow, kind of cutting past that, when we got the inflation data last week, on what was it? I think on Friday or something. It was either Thursday or Friday. I mean, it was really bad, right? People expected the U.S. inflation rate to kind of deflect downwards because we saw that the previous month inflation rate was actually a little lower than the month before that. So we thought that we're kind of on the right track, but that wasn't the case because we ended up just flying right back up to all new highs, right? The highest inflation rates we've seen in decades, which just scared the markets. I mean, in my own Discord, like Friday evening, I was talking to some folks and saying, I wonder how much of this fear right now is going to translate over to the crypto market over the weekend. And a lot of it did, right? We just saw so much turmoil in the crypto markets over this weekend. So it's also fair to say that obviously the crypto markets are very much intertwined with the equity markets around the world, or specifically within the US. The whole idea, even that fact that Bitcoin is an inflation hedge, obviously that goes out the window. At the end of the day, all these crypto assets are risk-on assets. When individuals, when institutions want to come in and throw on more risk in their portfolio, this is where they go to really get their hands on more risk. So it trades as a risk-on asset. When there's more fear, naturally people kind of tend to avert away from any risky assets, right? But anyhow, he came out of the 75-point hike, which the funny thing is, I mean, the market has been pricing that in, and people actually wanted Jerome to go forward with that type of hike. Usually people want a smaller hike because the biggest fear of going with way too much of a hike is in the fact that you can trigger a recession. Powell's concern right now is how do we lower the amount of money in the system right now that's being spent and so forth without triggering a recession. Like, he's trying to really walk on a very thin line, which is very, very difficult to do. And I believe in history, it's only been done once ever that it was possible to raise rates aggressively while not triggering a recession from doing so, once out of like like a dozen times or something. And even then, it was like a very specific situation during wartime when that one time it actually didn't trigger a recession. So everything points to the fact that we're going into a recession, right? Which again, nobody likes. Now, the reason why I gave you all of that little spew about Jerome Powell and so forth is because I do think that, if the equity markets rally, we're going to see a rally in Bitcoin. I think we are going to see that. We'll rally in cryptocurrency as a whole. So my bet on crypto right now is based on the fact that I do believe there's going to be some upward buying pressure in the equity markets, at least for Thursday and for Friday. Again, I could end up being completely wrong here, but I think we've seen so much pain there. And the fact that today kind of went as it kind of should have gone, right? If you went too aggressive, people wouldn't have liked that. If you went too light, people would think that they're not taking this inflation issue serious enough, and that's a whole other issue. If inflation does end up staying high for a very long period of time. So he did what was supposed to be done. That was priced in, so there's no surprises. I think in general we might see, in terms of fear, just people being a bit more chill now for the next month or so until we get a new inflation reading and so forth. So I think we kind of saw the majority of the volatility for the time being. Now, there are some parts in the crypto market right now where we do not yet know if there's a contagion effect. We saw how there's a venture capitalist 3ARK, major venture capitalists within the crypto space. Yesterday in particular, they got liquidated out of a lot of their positions. A lot of the selling off that we saw was also attributed to their positions being liquidated. We're still waiting at one of the top bosses at 3ARK to kind of put out a Twitter thread as to what happened, because the belief is the fact that they are just completely busted at this point. They still have some positions out there, specifically some loan positions out there. Even it's, I think, it's in the hundreds of millions of dollars. So those are still at risk. And as far as I saw last time, I think if ETH kind of drops somewhere right above 1,000, they would get liquidated on those unless they protect that position. But I do think that unless something comes out of left field right now, unexpected, there might be some buying. There might be some buying coming in. Now, personally, I'm not the biggest fan of TA. Like, I get it. Yes, in some circumstances, TA works, but I feel like it's just one of the tools that you have to use to try to properly time an entry or an exit. You can't just use it solely, right? It's not like, all in one kit that can always, give you an edge in the market. I don't believe that. But either way, we're going to look at the chart right now. So one thing that people do tend to look at is the moving average, 200-day moving average, and the weekly candles. And we've had a few bounces of this over the past couple of years here, and we've kind of come down to we have broken under it, as you could see here, but we've begun to kind of try to take over some of this. We're currently trading at 22,320, so about 2,300 points above the lows, I believe, around. Yeah, just about, so we're trying to reclaim that level, at least closing above it, but we do have to last till Sunday. But when we look at things like this, it's kind of how we weigh the risk and rewards here. Does making a bet, does making a gamble here, trade make sense? We are at a major support level. Another thing that people like to look at is usually of Bitcoin, when it comes to their, whenever they have, it's always been the idea that of every new market cycle, the lows of that new market cycle never go below the peak of the previous halving period, right? Which in this case would actually be about 20,000. If this were to break, if Bitcoin were to go under that, that would actually break that whole pattern that's existed over the past decade. So a lot of people are also looking at that. I could imagine there's a lot of orders, a lot of limit orders placed there because people think, okay, well, it worked in the past. Why would it not work now? As I say that, I'm also going to say that it could definitely work. I mean, if anything, there probably will be a bounce there. I mean, we're seeing a bounce of 20,000. So if anything, maybe some people are trying to front run those limit orders already by getting ahead of it. It doesn't necessarily mean that we won't see a rally for 1 week and then come right back down and crash through. Okay. And let's fast forward. I do want to let you guys know what I did end up buying. So I ended up buying Atom, right? So this is the token for the Cosmos blockchain. You can see how it came down in price. I ended up buying it on KuCoin, 2x leverage. It's a very small position. I'll be honest with you guys, it's only 4,200. And the reason for that is I basically used whatever severance package I got from Luna crashing, right, the past month. I lost, from the peak, I lost like, 60, 70K, whatever was left over from that. I just threw it into Atom right now. So we'll see how that plays out. Right now, I have an unrealized P&L of about $81. You can see the liquidation price at 3.7. The realized P&L is basically the commission, the fees that were paid to get into the trade. Obviously, if you're trading anything on the futures market, there's a funding rate, right? That's typically paid by the longs or the shorts, depending on whether it's negative or positive. As you can see right now, the projected fund rate is actually positive. So if this position, if I keep it open for the next 6 hours or so, I'll end up having to pay that percentage out to the ones that are shorting it. But it can flip flop. I'm not gonna get too much into that because I'm sure most of you kind of know what I'm talking about here. And then going back to Celsius, I mean, last time in my last video, we spoke about this loan position that they have out where they've borrowed 231 million DAI. It was actually great in that video, but they ended up repaying that loan. Well, they paid back. Oops, did I just move this out of the way? They ended up paying back, what is it, 28 million and 19 million, which helped improve their collateral ratio here. The liquidation price now is at 14,000, so it's much better. I think in that video when I made it, it might have been at 17 or something like that. So they've also brought this down. Now, again, there could be things that we do not know yet, right? So this is why this bet, trying to buy this dip right now specifically, is a risk, because we don't know what we do not know. And I think that's a big risk. We might get a big headline of another big player in the space exiting, or, even there being a rug, right? You never know. You never know. But if you guys do want to be updated on this position, I mean, best thing to do, you can just join my Discord. It's in my description. It's completely free to join. I mean, I've had it running now for a few months. It's just the easiest way for me to kind of give out some quick, easy information on the spot, right? If I haven't to make a full-on video about it. I also want to thank one of my viewers, Federico. In my very last video, he came in, he actually gave me a €5 super chat. I mean, that's actually the first time I ever received anything income related outside of YouTube ads. Like, you guys know, I never take on sponsorships for a reason. I never want to take on sponsorships that I feel that I'll be making money, but in doing so, I possibly put your money at risk. That I'm looking at the company, I'm looking at what they're offering, and I'm like, this is not going to do good by my audience. So I get emails, but I almost reject every single one of them for that reason. And then in terms of ad revenue, I've also been very transparent about that on my Discord. I have a little finance section there where I show you guys exactly what I make per month from my YouTube channel. And even if I'm giving something for free, like maybe like 2 months ago, for example, I was given like a free subscription to like some service to like watch some wallets. I even told people that, right? And again, the reason I do is to make sure that people know that if I ever make comments about something, it's important to know whether or not I'll have a bias about something because they got some gifts or I got some money for it. So I try to be very transparent about that. But this is really cool. So again, Federico, thank you so much for this €5 super chat. But if you enjoyed this video, throw it a thumbs up. Go subscribe for more crypto related content or DeFi related content, whatever it might be. But thank you for watching and have a great day.